Hey everybody, hey, I am Salandi. I am an AKA Suham, baby. Man, let's talk about it. Yes, I'm Suham, baby, with loanswithsuham.com, powered by Edge Home Financial. My NMLS number is 251-9087. Let's talk about some myths concerning home buying. All right, we're talking about primary homes. Typically, we talk about primary homes and investment homes because many of you know, and for those of you that don't know, I am a mortgage broker. I have access to over 100 lenders that I can get financing for you to purchase a home, refinance a home, or investment properties. I'm also a real estate investor. I buy homes myself and fix them and sell them. I buy homes and fix them and rent them. And I always like to say I'm a playwright because I am. Yes, I've written and produced several stage plays, and I love that. So when you see the creative side of me, that's why I love finance, I love education, and I love entertainment. So I want to talk to you about some myths that may be stopping you from purchasing your home or your investment property. Yes, early this morning. Now, one of my most favorite investor lending is Rehab Wallet, right? I've been able to go through them and get several loans to purchase homes, rehab them, turn around and sell them, or turn around and rent them out. They're a great lender. That's one of the lenders that I have access to. I also have access to a bunch of other investment lenders and people for buying and lenders for buying primary homes. But here's what I want to start out with. Many of you think, oh my God, I cannot afford a house. Here's what I want to tell you. If you are paying $1,300, $1,400 in rent, you can afford a house, right? If you've been paying that for a number of years, you can afford a house. So it's just you stepping out. Many of you think that your credit is crappy. And when I speak to you, I ask you, how do you know your credit's crappy? And then you tell me, I just feel like it's bad. But you haven't even pulled a credit report. Here's the thing. We can't fix what we won't face. A lot of people think that you got to have a 700, 800 credit score to get a home. That is a myth. That is not the case. You do not have to have perfect credit to get a home. Now you do. I want you to have a 640 or better because you tend to get better interest rates, right? Which then reduces the amount of interest that you pay on the loan, and it also reduces the your monthly payments. Okay, but here's the thing. We do loans with people with a 580 credit score. Now, I don't want to do this, but there are programs that exist where you can get a loan with a 500 credit score. You may have to put down a whole lot more money. And you might be in a situation where, listen, my credit is shot. I got a 500, but I got a bunch of money. And I understand that I'm going to go ahead and buy this home with this 500 credit score because I know it's temporary. I know that in 12 months, after I've made 12 payments on time, I can go back and I can refinance if interest rates are lower and get a lower interest rate and a better term. So, you got to know what your plan is. So, one, stop thinking that you need perfect credit to get a home loan. You don't. But you do need to look at your credit. And if there are things that you can fix, I want you to fix them, i.e. things that are on your credit report that are 7 years or older. Dispute it. By law, it has to come off. You've been penalized long enough. 7 years and or older. Dispute it. Where do I get my credit report from, Sue? You can go to annualcreditreport.com. You can go to myfico.com, Experian.com, Equifax.com, TransUnion.com, Google.com, and ask, where do I get my credit report? You see, I want to help those who want to help themselves. And if you're ready to help yourself, then I'm here to help you. But it's going to take us working together. And even more importantly, I think, than a credit report is your mindset. You got to get your mindset right. You got to believe that you deserve home ownership or whatever goal that you have set before yourself. You have to believe that you deserve that. And you got to work towards that. No matter what obstacles might come your way, you have to be steadfast, unmovable, and believe that you're going to achieve that goal. Here's the thing. Somebody commented the other day and said the biggest thing about home ownership is fear. Let me tell you the best way to combat fear that I have found that works for me. There are two ways. One is to get education, because when you know more about something, it diminishes the fear. Number two is to take action, because guess what? When you take action, you're going to learn more about that thing, which is going to diminish the fear. And as you're taking action, you're going to grow more courage because you're going to continue to take steps towards success. So if you want to manage fear, conquer fear, then get educated about a thing and take action, mobilize. So what we're going to do today is, if you haven't looked at your credit report in over a month, 2 months, 3 months, 5 years, 10 years, you're going to pull a credit report, and you are going to find where you can get one for free. Or in my opinion, you want to go to myfico.com, myfico.com, and pull all 3 credit reports for $30. Listen, you go in, you eat at the buffet for more than $30. Okay. So invest in yourself and pull that credit report, the Experian, the Tri-Merge credit report, the Experian, the TransUnion, and the Equifax, and see what your scores are, and see what's on your credit report, and dispute inaccurate things, and dispute things that are 7 years and are older. All right. Number 2, here's a myth. People think they don't need any money to buy a home. It sounds good. It's a great marketing, slogan or whatever. But the truth of the matter is, you need money, people. It might not be your money, but you need somebody's money to do a home loan, because even with down payment assistance programs, right, you still need upfront money to commit to a deposit when you sign a contract on a home, to do inspections, like a home inspection, which I recommend you always do a home inspection. I don't care if it's a new build or not. These new builds are coming up with a lot of discrepancies, and so always do a home inspection. You're going to need a termite inspection, which is a pest inspection. You may need a septic tank inspection, a well water inspection. But you have to have those monies up front. You will have to pay for an appraisal for someone to come out and determine the value of the home. Those monies have to be had up front. And typically that's going to range between $2,500 to $3,500 that you will need up front. Most earnest money deposit on the East Coast, I'm in South Carolina, is typically $1,000. Okay. Now you start getting towards the West Coast, Central America, Central United States of America, the deposits may be higher. But on my side of town in South Carolina, you're looking at typically $1,000. Sometimes you can get away with $500, but the way that the culture has changed, most sellers want at least $1,000 in deposit money when you sign that contract. Okay. So let's debunk that myth of thinking that I don't need any money to get into a house. Yeah, it sounds good. People say that. Yeah, but nah, you do. All right. You might not have to put down a down payment, but you do need money to conduct those inspections, to put down a deposit, and to pay for the appraisal. So let's debunk that myth. All right. Now, let's debunk the myth that all down payment assistance programs are the same, because they're not, baby. You have some that are grants that you really don't have to pay back. You have some that you pay back while you're paying your mortgage. It's actually a second mortgage on your home. It might only be $25, but you're still paying it back right along with your first mortgage. Then you have some that, in order to qualify for the down payment assistance program, your debts cannot be that high. They cannot be over 45 or 50% of your income. Okay. So that's something to take into consideration as well. You want to minimize your debts if you think you're going to need some down payment assistance, because down payment assistance programs are different. Everyone has different parameters. They're not all built alike, just like all lenders are not built alike. And as a broker, I have different lenders and avenues that I can go down to see where your scenario fits. All right. Then there are some down payment assistance programs that require you to live in a house a certain amount of years. You may have to live there 7 years or 10 years. If you refinance the loan, or if you sell the home, or if you move, you would have to pay back the down payment assistance. So it's just different parameters. A lot of people are signing paperwork and say, yeah, I got down payment assistance, but you don't know what all it entails. And then when you go to refinance your home, like 2 or 3 years later, you realize that you're getting less money than you anticipated, because guess what? We have to pay off your down payment assistance that was given to you because you are refinancing this home before the time that you agreed for on that paperwork. And again, of course, the best down payment assistance program is the grant, the money that you don't have to pay back, baby. That's a great thing. But sometimes those grants too, they require you to live in the home for 7, 10, or 15 years in order to avoid paying them back. And then there are the grants that you don't have to pay while you are making your mortgage payments. However, once you pay your mortgage off, or if you sell your house, or if you refinance your house, you have to pay that money back regardless. Okay, so that's just something to think about. I wanted to debunk some myths. We wanted to debunk the credit myth. We wanted to debunk the not needing money myth. We wanted to debunk the down payment assistance myth. Now let's talk about what's another myth? What's another myth? Working. You need to be continuously employed for 24 months. That's 2 years. You have to be continuously employed for 24 months without a 30-day gap. Okay. So listen, the only time that we may be able to get around that is if you are a college student and you're just entering the workforce. All right. But other than that, baby, if you 50 like me, and you don't got no retirement income coming in or something like that, you got to show where you've been working for 2 years continuously. In order to count your in order to count your part-time job, because a lot of people say, I'm going to go get a part-time job next month. Baby, that's great. But we can't count the income unless you've been working 24 months. Yeah. 24 months. It has to be 24 months in order to be able to count the retirement income. And even with your primary job, we still need 24 months of employment history. It may not be with the same employer, but we need 24 months employment history. It's always a great thing if it's with the same employer, because that shows stability. That shows that you have been there a while and that you're probably going to be there a while. So if you want a strong case, with financing, if you've been at your job 10 years, boom. I mean, that's pretty stable, unless your job shuts down. But don't be discouraged if you've just been at the job 2 years, because again, the requirement is just 2 years of continuous employment. All right. If you had, I think the guidelines say if you've had 3 or more jobs, you may have to do a letter of explanation as to why. And sometimes people change jobs because of more pay. Sometimes people change jobs because of relocation. So these are things that we can explain. It's called a letter of explanation. All right. So we want to debunk that myth. So don't think that if you don't have enough income coming in right now, that you can just go get a part-time job and we can count that income. Unfortunately, when purchasing a home, a primary home, we will have to show 2 years of employment with that part-time job. Okay. Now let's talk about USDA loans, right? USDA loans and VA loans are the only 2 loans that you can get into a home with 0 down payment. Now, mind you, we've already said you still need money up front, right? So don't think that because these are no down payment programs, that you don't need money up front. You need money for the earnest money deposit. You need money for inspections. You need money for the appraisal. Okay. So USDA and VA are loans that do not have a down payment requirement. USDA is in specific areas, and it also has income restrictions, right? Now, me as a veteran, I love the VA loans. I'm a Marine veteran. There's no down payment. There's no primary mortgage insurance. It's a beautiful loan. It's there to help veterans. You can qualify for a higher debt to income ratio. What does that mean? That means that your bills, you can have a little bit more bills and still qualify for the loan. The VA does not have a credit score to go by for a VA loan. Every lender sets what their requirement is. So that's why you'll see some lenders say in order to get a VA loan, you have to have a 640 credit score. Well, let me go ahead and debunk this myth for you. Not every lender is the same. There are some lenders where you can have a 600 credit score, a 580 credit score, and you can get a VA loan. Okay. So when you are turned down by a bank or somebody online, that doesn't mean it's the end all be all, right? As a mortgage broker, again, I have access to different lenders, and they have different requirements. So as a veteran, I want you guys to hear me. The VA has no set credit score. It's the lenders that have these overlays, meaning that they set their own guidelines and requirements. There is an online lender that says you have to have a 640 credit score for the middle score. And there are other lenders that will loan to veterans for a 580 or 560 credit score. So everything is, let's get the myth out and thinking that you got to be all the way up here. Now, as a veteran, here's another thing I want you to know. If you are entitled to a VA loan. Most people think you can only use your VA loan once. That is not true. If you have entitlement left, you can have more than one VA loan. How do I know? Well, of course, I'm a mortgage broker, so I know that. But number two, from experience, because I have 2 VA loans currently right now that I'm paying. So I just want you to understand that even though you may have a VA loan or have had one in the past, you could still potentially qualify for another VA loan. All right. Now let's debunk the myth on FHA. This is the last one I'm going to do for today. Most people hear FHA loan, they think, oh, it's a first time home buyers program. It's absolutely not true. FHA stands for Federal Housing Administration, right? Anybody can apply for the loan. This loan was created by the federal government to help more people get into homes. It has it's not as stringent when it comes to credit, and it doesn't require as much money to be put down. The FHA loan, you put down anywhere between 3.5% to 5% on a home. Most times it's 3.5%. Most times if you've got a 580 or better, you can qualify. I've seen some people qualify with a little bit lower. I do want to say this. If your score is lower, you may be required to put down 10% of the purchase price. Okay. So I think a sweet spot for people to aim for with the credit score is 640. But understand this, we approve people with a 580 credit score every day. But I want you to know that I would love for you to have money in your bank account, in your 401k, because it makes you a stronger candidate to have those monies. You have to show that you have the down payment coming from somewhere. That down payment either has to be shown in a retirement account, savings account, checking account, stocks and bonds. It can't be cash underneath your bed. It cannot be cash in your safe. It has to be shown somewhere, proof, and not a picture of you taking it with your phone, the cash on your bed spread out or to your ear. I'm just joking. I just had a rap video shoot up in my head, but you have to be able to prove that this money is there. Now, if you don't have the money can be gifted to you. Again, this has to be proof. The money has to, we have to show proof of the money leaving that person's account, either going to the closing attorney's account or being transferred into your account. But it all has to be documented, right? Because otherwise you could go and get a loan for your down payment. And that's not good when you're buying a house. You're not to get into any new debt. All right. You can't go run up a credit card or get a loan in order to put a down payment on a house. That's not going to work. So that's why if you're getting funds from a gift, or if you're using funds for your down payment from your 401k, your checkings, your savings, your stocks and your bonds, it has to be documented. Cash won't work. One of the times where cash won't work, and normally cash works. So with the FHA loan, again, it's not first time home buyers. You can qualify for it if you meet all of the criteria, then you could qualify for it. It's 3.5% down, depending upon your credit score. Could go up to as high as 10% down. You can get an FHA loan for single family, duplex, triplex, or a quadruplex. One of the things that you guys know that I always harp on, because I'm a real estate investor, is why not build a duplex? Why not buy a duplex and live in one side and rent the other side? Now you've done two things simultaneously. You become a homeowner and an investor, right? Simultaneously, by purchasing or building a small multi-unit, meaning a duplex, triplex, or a quadruplex. Then you, again, become a homeowner. You're living in one side and you're renting out the other side, and you're getting money to supplement the cost of your mortgage. You live in that for a year, and guess what? You go get another property. And you live in that for a year, and guess what? You go get another property. And you can continue to use your FHA loan like that. You just have to occupy the property as your primary residence for 1 year. That's if you wanted to become an investor and a homeowner simultaneously at one time. That's the game plan for that. Or if you just want to say, hey, Sue, forget that investing crap, I just want to buy my house, then the FHA loan is there for you too. Again, less stringent credit criteria and less money down. So in this video, we have covered several myths. We've covered the credit score myth. I've told you how to get your credit report and what you need to do to dispute things that are inaccurate. We have covered the myth of you don't need any money to buy a home, because you do need money up front, whether it's your money or somebody else's money, because you have to pay for inspections and you have to pay for an appraisal. We have covered the myth of thinking that you can only use your VA loan once. That is so not true. If you have entitlement left, you can use your VA loan again. And we have covered the myth of FHA loans. They're not only for first-time home buyers. It doesn't even stand for that. It stands for Federal Housing Administration, and you are entitled to use that loan if you meet the criteria. I want to thank you guys for being on this video. I hope it's been helpful. Listen, you can share the video. Thank you for being in this Facebook group. I'm going to do more videos like this. If you have questions, you can post them. I will answer them. If you are watching this video outside of our Facebook group, if you want to join, just simply search on Facebook Buying and Refinancing in South Carolina and join our Facebook group. We've got a bunch of videos in there, a bunch of blog posts that can help you with purchasing your primary residence and or your investment property. Until next time, I'm Solandia Hammond, aka Suham, baby. Again, with loanswithsuham.com, and my NMLS number is 251-9087. Have a fantastic day. Share the video.